Aerodrome is currently trading near 30 cents. If you pull up the chart, it looks like a complete disaster. But if you look at the on-chain data, retail is missing the massive accumulation happening right under their noses. People see a dead chart. I see an asset generating $147 million in annual cash flow, with exactly 50% of its total supply locked off the market. If you misunderstand this specific market structure, you are going to get shaken out right before the liquidity cycle shifts. Today, we are going to look past the fear. I'll break down the exact revenue numbers, the weekly chart patterns, and the specific levels I'm defending right now to position for the next macro move. Right now, price action is hovering between 30 and 35 cents. Market sentiment across the board is bleeding out. Most traders just stare at the red candles and panic sell. They completely ignore the underlying mechanics of what makes a decentralized exchange actually valuable over the long term. But there is a glaring divergence right now between the price action of the token and the fundamental health of the protocol itself. We are sitting at a massive buy-demand zone that is held strong through 2024 and 2025. This is not a random area on the chart. This is the exact extreme fear condition I like to invest in, especially for proper projects with real revenue being made. But there is something in the technicals that changes this picture, and we need to understand the fundamental base first before we place a single trade. Let us look at the real data. The Aerodrome flywheel is based on a very simple premise. Better execution leads to higher volume, which increases revenue, driving more votes and deeper liquidity. It is a self-reinforcing loop, and the data shows it is working. Right now, 50% of the total token supply is locked. The average lock duration is 3.7 years, and 93% of those are auto-max locked. That means half the supply is completely removed from the liquid float. But it gets better. In recent epochs, the lock rate hit an incredible 87%. Market participants are aggressively hoarding rather than selling. Why? Because the protocol is printing money. Aerodrome has generated over $125 million in annual fees, plus $22 million in bribes. That is nearly $147 million in total annual cash flow. They are generating revenue while only marginally increasing the circulating supply. Recently, holder revenue hit $10.5 million, outpacing the $7.4 million in net emissions. When a decentralized exchange achieves an efficiency ratio above 1, it proves the model is not relying on inflationary tokenomics to survive. Aerodrome crossing 1.3 is a massive fundamental milestone. This is the definition of sustainability. With over 700,000 holders, it ranks second globally among decentralized exchanges. It holds $380 million in total value locked, ranking 7th, while pulling in $160 million in trailing 365-day fees, placing it 6th globally. Most importantly, the average trading volume per user is $8,900. This is not bot spam, that's heavy-hitting capital. The fundamentals are screaming strength, which brings us directly to the chart. Let us move over to the weekly time frame. Right now, price action is trapped inside of a massive descending channel that has dictated the trend since 2024. We are trading well below the 21 exponential moving average, which is acting as dynamic overhead resistance. But here is where it gets interesting. Inside of that broader channel, a clear falling wedge has formed since the end of 2025. Price is squeezing tight, and it'll have to make a decision very soon. We are sitting right at our closest support zone of 28 cents. This is the same high buy demand zone that caught the bottoms in 2024 and 2025. If we pull our Fibonacci retracement, anchoring from the macro high of $2.35 in December 2024, down to the major swing lows of 28 cents in April 2025, and earlier this month, the upside levels become very clear. The 236 Fibonacci level sits at 76 cents, and the golden pocket 618 sits at $1.50. Meanwhile, our Fibonacci Relative Strength Index is sitting in extreme oversold territory, down in the -30 region, and is just starting to point upwards.
So, what's my strategy here? As a reminder, Aerodrome is an older position of mine from an airdrop. I locked it on the platform to earn revenue share, built up a decent bag from the yield, and took profits on most of my stash between $1 and $1.50 last year. Right now, I'm treating this as an accumulation play for the future. I'm actively dollar cost averaging back in between 26 and 36 cents for my long-term bag. For short-term traders, the 25-cent level is your critical invalidation point. A weekly close below 25 cents makes a lot of sense as a stop loss, or even a short trigger targeting the 18-cent region. But if this bottom holds, I'm deploying a trailing stop strategy. As we hit my take profit targets, I move the stop loss to the previous level to protect capital. My recovery targets are 45 cents, 75 cents, $1.50, $2.30, and ultimately $3.60. When you synthesize the fundamentals and the technicals, the risk versus reward profile is heavily skewed to the upside. You have a protocol generating top-tier global revenue with a structurally constrained supply, sitting exactly on multi-year macro support. If we lose 25 cents on a weekly closing basis, my short-term thesis is invalidated, and we look to reload lower. But if that falling wedge breaks to the upside, and we reclaim the 21 exponential moving average, the expansion back toward the golden pocket will be aggressive. I have to let the chart decide, but I also have to be positioned before the breakout actually happens. The data points to a highly capitalized protocol trading at a severe discount relative to its cash flow. The market is pricing in fear, but the on-chain metrics show aggressive accumulation by smart money. If you found value in this breakdown, hit that like button and subscribe to the channel so you do not miss the next setup. Also, if you want my daily market updates and faster trade ideas, join my free Telegram group. The link is right there in the pinned comment. I highly recommend you watch my latest video breaking down Uniswap, which is the main competitor on the Base network, to understand the broader decentralized exchange landscape. Remember, none of this is financial advice. Thanks for watching, protect your capital, manage your risk, and I'll see you tomorrow in the next one.